Ah, there we go.
Yeah, there we go. Good morning.
Hello.
Hey, Laura, how are you? Good to see you.
Very well. Good to see you.
Just a heads up, my internet's starting to get a little spotty with the
Hmm.
storm. So I was
I was
just
going to ask
watching
you.
some
I was going to
YouTube
ask you
and
how
it's
things are
like,
going over there.
it hasn't been bad where I am yet. It's supposed to hit, I think, like tonight, tomorrow morning. But South Tampa, I had my buddy come over this morning to bring his boat. Um, he said there's already like palm trees falling over and stuff.
Mm-mm-mm.
Really? Wow. Yeah, my
Yeah,
daughter went. My daughter left the university yesterday to come out here, so she's home. But it's definitely not fun. Hey, Jeff, how are you?
yeah.
Hey guys.
Hey there. So, hello, everyone, and welcome to WealthQuest Roundtable Live. Yay. Today, we have the band back together. It's always so nice to have our WealthQuest experts with us. I'm Laura Cadden. I'm with the editorial team. We have Francisco Bormea. There he is.
Hey
He's
everyone.
manning the chat. So, he's the guy that's going to be talking back to you and all the technical aspects. Thank
Hey,
you,
Francisco.
Francisco.
No problem.
And we have Roger Scott, Jeff Zaninieri, and Lancy Polito. If you guys just joined us, you'll know that these fellows are all in Florida, except for Francisco and I. So, especially Lance. Lance is right in the path of the storm. So, if we lose him at some point, I hope the wind doesn't, the house doesn't start to shake or, a scene out of
Hope the
Wizard of Oz.
cows don't get caught up in the.
The
Yeah,
chickens.
I got the chickens locked up in the coop. That's like one of the windows is already broke. So that's like more I thought about putting them in the garage, just like shit everywhere, so that ain't happening.
Well, we can see the coop while you're talking, so we'll know if it blows away and let you know.
You should be able to, right there.
Yep. Yep. So it's almost Q4. How time flies. So I thought we should do a challenge, a roundtable quarterly challenge going forward. So starting with the S&P. So it's closed lower on 56% of the trading days so far this year. Yesterday, of course, it hit the low for the year. Where do you guys think it's going to end by the end of Q4? What do you think, Jeff? Where do you think the S&P is going to be?
I'm gonna
I'm
show
recording
you.
it.
I'm gonna show you. Let me share my screen here. There we go. I drew a line. I drew a line in the sand. This line goes back to February 2020, pre-COVID. And we're going to go back to that level by the end of the year, which is about 7% lower on the S&P. We might go lower than that before that, but we're going to close around, in my estimation, that level, 3,300, 3,380, something around there. So I have 3,380 as this hard line in the sand here. So lower is my guess, Bob. I mean, Laura, I'm sorry. On the year.
You can call me Bob. That's okay. All right. That's a depressing thought.
Like Bob Barker from The Price is Right. We're doing The Price is Right game.
That's,
Come on down. You're the next contestant on the Price is Right.
This is a showcase showdown that I'm doing.
I like it. I like it. How about you, Lance? What do you reckon?
Well, I will grab the screen if I may. So first of all, every big bank out there was calling like 4,800 and stuff. So here's the chart of the SPX. So obviously, if anyone listens to like analysts or big banks, that is the worst advice ever. Like if they upgrade a stock or say our price target for the S&P is 4,800, it's probably going to be like half of that. So Goldman Sachs just came out, I think it was last week, and they said their new price target is 3,600.
Yep.
So before it was what, like 4,800 or something. So
I'm actually looking at that report right now, Lance, as you're talking.
So they're all after the curve. Like if you recall, like remember like Zoom's price targets. Here, I'll pull it up here. like Zoom's price targets back. Remember, Zoom was what, 200, $300? It was 385, 300, 190, 325, and now it's $75. So like they're so bad. So if you're, thinking anything like that, wrong. I tend to agree with Jeff though. The Russell's already back to the pre-COVID level. So I would say, back basically they want to erase all the gains the market has made with the fake money with COVID, right? So that makes sense. If you look at like the Russell, we're already there, right? You look at the Dow, the diamonds, we're getting there. I mean, we're already there too, actually. So, give back everything, right? And that's kind of been the theme of the whole year, is to give back everything that the market has done.
All right. Roger?
My view is I think we're going to. I do agree with Jeff and Lance. We may go a little bit lower. That could be because we haven't had a capitulation yet. We need to have a capitulation to end this thing, and we haven't seen that yet. But I do believe momentum levels. The fact that the Russell is holding up well, and I'll talk about that a little later. I'm actually, interestingly, I talked about that report that Lance talked about in the Goldman Sachs report. Their previous level, Lance, was 4,300. Funny that you and I are talking about the same report. Now it's 3,600, and they're talking about next year, end of 2023, 4,000, and a hard landing would see 3,750. I actually believe we're going to be somewhere right around the 4,000 level, maybe 3,800 to 4,000 level. I think we're going to stay in this chop. I think by the time New Year's comes, we're going to start. Our trajectory is going to change. I actually think because of the Russell and the small caps and what we're seeing right now with momentum levels, I don't think we're going to have much more downside, and that's kind of what we're all saying. But we're not out of danger zone quite yet. So for the S&P to drop to 3,300, which I think is the level that Jeff was kind of close to. I correct me if I'm wrong, but I think it was like around 3,300.
Mm-hmm.
I think that was actually the level that we all thought that was going to be the low about 6 months ago. We all said 33. We kind of were talking about 3,300. So I still believe that may be there, but I think we need a capitulation. And I think that we may hit it for like a day or two, but the fact that the Dow and the Russell are starting to get a little are into that territory, I think we're getting really near the low. Really do. I think we're getting close. Doesn't mean we can't stay around these levels for quite some time. That's the other end of, the other side of the coin.
So in Q4, keeping that in our mind. Forgive me, I have a little bit of allergies today, so I'm like a little fuzzy. What do you think is going to be hot and what's not in Q4? Are there specific sectors you expect to outperform or underperform? Do you want to start us off, Roger?
Yes, I have a lot of very strong opinions about this, actually.
Ooh.
Let me share my screen. Oh, yeah. I want to show you guys something. So if you look at momentum levels, and this kind of just goes, this is just another part of what we were just saying, and Lance just said, the Russell's already there. Well, here's the thing. I want to show you guys something. 11% on the Russell 2000, 7% on the QQQ. 18% on the Russell 2000, 9% on the QQQ. How about the Dow Jones, right? Dow Jones, 0%, 8%, 0%. I never thought I would say that. Still, 18%, 11%. A lot better than 0%, right? And the S&P, 4%, 13%, 11%, 18%. Now, I want to show you guys something. If you look at the Russell 2000, you will notice, and most of this is not really debatable. This is kind of factual. If you look at when the Russell really started smelling a bear market, was about 10 months before the S&P did. Now, I know what you're going to say. It made an all-time high here. Yeah, but it did nothing for 10 months. And then when it realized that Biden was going to win, and it thought that Biden was going to be soft on China, it went up, and then for a day, and then it just dropped when Biden said, no, I'm going to do the same thing that Trump's been doing. So the Russell smelled the downside about 10 months. What was the first sector that started moving down within the Russell 2000? It was not techs. It was biotechs. So let's look at biotechs right now, and let's see in the Russell 2000 what stocks are leading us out of this. bio, pharma, therapeutics, therapeutics, hospitality, healthcare, therapeutics, pharmaceuticals. You don't have to be a market wizard to see. And these are 2,000 stocks we're talking about. That's 7 pages of stocks. These are the strongest stocks. Now, look at this. Fears Biotech Summit. This is September 19th. As the biotech market teases, turning the corner. Investors Business Daily. Something unusual is happening right now with biotech. Barron's. Bull market in biotech is going strong. 4 reasons healthcare could lead the next bull market. I think you guys could see where I'm going with this. Small caps are starting to smell the turnaround. Biotechs were the first sector to take us down. Biotechs will be the first sector to take us up. And biotechs are in a very different environment right now because a lot of the large cap healthcare companies are not dependent on public money. They're dependent on government spending, and that's not going to change. Also, DNA programming, cell programming is not a fantasy anymore after COVID. It's a reality. So there's going to be there already is a huge takeover factor coming in. Matter of fact, when I was looking at these stocks that I'm about to share with you guys, the top 2 biotechs are in merger talks right now. So there's something really hot happening. And again, usually the first stocks that go down are the first ones to go up. Biotechs are very speculative. Speculative stocks are the first to go down, first to go up. I'm starting to see a reversal in the Russell 2000, and biotechs are the first ones to do it. So I have a very, very good case for this right now. Hopefully it'll continue. Hopefully I answered your question, Laura.
You did. Do you remember during the 2008 recession, biotechs were actually, it was a bull market for them as well?
Yes.
Biogen's up 30% today because they had breakthrough news in Alzheimer's. So that's
Thanks for
PRTA
sharing.
is up.
that's
PRTA
leading
up
the entire
70.
that's leading the entire space. 30%. So
Good to know. Good
might
to
be more, 35 at this point or something like that. But it's a mega move in a large cap biotech company. Great news. Alzheimer's is a terrible disease.
Yeah. Thanks, Jeff.
It's-
I did not. I had no idea.
Yeah,
So that's-
PRTA is up 70%. That's what's causing biotechs to move today. But I mean, I'll be honest though, if you said Biogen was up, 35%, 40%, I would have said the XBI would be up 5, 6, 7%. You know what I mean? Like the
Mhm.
biotech.
That's a massive company. It's a
Yeah,
one of the largest.
and large cap biotechs are only up over 3%, which, in my opinion, that's actually really weak compared to how they normally would move.
But that's
And-
that shows you though that like they're working on stuff that isn't you can't put a lid on cures to Alzheimer's disease. Like there's going to be a market for that, whether Jay Powell loses his shit and takes interest rates to 10%.
Yeah.
It doesn't really matter. Those breakthrough drugs are going to be bid. They've got a monetary value assigned to them. So I like that idea,
Yeah.
Roger.
Eli
and-
Lilly too in the space for all
Yeah.
they're up $26. That name's been very strong, but ever since they got involved, it's been holding up very well. The problem is, when you try to trade these names, it's liquidity.
Yes.
You're very wide. You're like, I traded PRTA yesterday. Sorry, heavyweight members, it was too late to send an alert. But I bought calls in it, and the bid ask was like $1 wide. It was like 250 by 380. It's just like I told Jeff this morning I should have bought 100 lot. Now with the stock up 70%, I only bought a few contracts because you can't get filled. You're trying to put an order in mid market and hoping you get filled out there. So it makes it difficult to trade, and that's why the ETF, the XBI for small caps and IBB for large cap biotech ETFs are very nice. And one last thing on Biogen, you look at a big move like that in a stock and you're like, man, if I had calls, I would be up, so much money. The calls are only up, the weekly calls are only up like 200% because it was such a big implied move already from the market makers.
Because the results were going to be in no matter what. So it was
Yeah.
it was an event. It was an event trade based around the data from the drug.
The data release. Yep. That
Yeah.
always does it.
Those I just wanted to pull up while we're talking about biotech. Those are the 2 biotech ETFs that I look at: PBE and BT, and both of them are the relative strength is a lot better than the large caps. They're not testing new lows as most stocks are. They're still up here. Again, just wanted to share that as we were talking about biotechs.
Thank you. I love you. I love it when you do that. Everybody loves that. That's awesome. So
Perfect.
what do you think, Jeff? Are you thinking biotech's going to be a big promising sector? Sounds like it.
I like the sector, but that wasn't what I had done for homework for you all. I've got something different.
What'd you
Let me
do? Tell us.
I have a teacher that's very demanding. Where we go. Wouldn't be the first time. So this is a chart of the XLF, the financials. And it's a relative chart that shows you what the financials have done since 2009 in relation to the 10-year interest rate. And so you can see with the dips in the rate have been dips in the XLF, and with the rise in the rates, you get these big bars up in the XLF and down in the stock until recently, where we've had rates go up and we've had XLF go down. I think rates stay high. I think XLF plays a little bit of catch up, and I think the financials will be the best sector in terms of the S&P because of that thesis for Q4, or the best of the worst, if that makes any sense. If we're let out of this, it's going to be because of strength in banks.
Huh. Very interesting.
Well, they can make a lot of money in these environments. People like getting 3%, 4% money market rates. They keep their money in banks, and banks are happy to have that money. With that money, they do things like trade bonds, trade commodities, trade stocks. And guess what? They make even more money on that money. So it becomes a self-fulfilling prophecy. It becomes something that's very good for the economy. It's one of the best things the United States has in general over the rest of the world, is a really strong, robust banking system. And so I think that money from around the world is going to come back into the United States. It's going to leave Europe. It's going to leave Asia, and it's going to find a nice home in US banks. That's my case.
Good philosophy. What do you think, Lance?
Jeff must have just took the trade I put on today in Citigroup, or as I say, City Junk. I actually just bought a long-term swing trade in Citigroup November calls this morning, and it's working out very well. I don't trade sectors or anything like that. I just trade individual stocks. But the banks have been crushed. Citigroup, it filled its earnings gap up from its prior 52-week low. So obviously buying stocks on 52-week lows is bullish. That's what I like doing. But I actually did bottom fish in some Citigroup calls today. We did see some buyers in November, cheap out the money calls in some banks like JP Morgan and Citigroup. Me personally, though, and JP Morgan, very similar chart, Citigroup and XLF and everything. Personally, though, I would avoid, and these banks have already crashed, names like Deutsche Bank, Credit Suisse. They're like the worst banks. But I think it's
They're
worth a
also
flyer.
they're also non-US banks.
Yeah. But it's not for. I don't think it's sunshine and roses. Like today, Citigroup's up almost 2%. Tomorrow it could be down 2%. Monday it could be down 2, 3, 4%.
That's true of every stock in the world right now, though.
Right.
I mean, tell me a stock that doesn't have that possibility of giving all its gains back the next day.
Yeah, but it at least they've already been sold off.
Yeah, exactly.
It's not like buying energy that's been holding up and is now starting to unwind, or utilities that were super strong that are now just getting 3% down days and stuff like that. It's been a slow, steady sell-off in financials. So taking a shot. Someone in the chat mentioned names like NLY, CIM, AC, AGNC. You could probably throw MPW in there, the REITs and names like that. They have been getting crushed. What you can do, and what I've been doing intraday, because I've been day trading a lot, is pull up just HYG is a good high yield or junk bonds, JNK, and they'll move. The correlation is almost perfect together. So if you get like a move up in HYG, let's say on the 5-minute, you're going to have the market rally, right? You're going to have banks rally. You're going to have those names rally. To be fair, though, today's the first day we have seen a rally. So I don't think, we're out the mud yet, but I mean, it's some light at the
today's
end
an
of the tunnel.
interesting day. Today's an interesting day because you had a central bank break from the insanity. They saw a panic. When I woke up at 5 o'clock in the morning, the U.S. 10-year was at over 4%. You had English bonds, the gilt, trading at 460 on the 10-year. This thing was negative 2 years ago. It was at 460. So they're having a bona fide bond crash in the United Kingdom. So the Bank of England came out today and backstopped it and started intervening by buying bonds. That created a bond buying spree across the entire world, which backstopped and took the insanity. Like Jay Powell sitting at home playing Nintendo or some shit, watching Rome burn. And then we have England coming in and saving the day because their country's already on fire. But it was a good sign that there's somebody sober somewhere watching these markets and not reading an economic report from 6 months ago. Okay. And so the market calmed down, stocks start to get bid again. But that's also good for banks, in my opinion, that they have a backstop there, that they're not going to let the inversion. We had Bodine was asking about this earlier. That inversion could get so bad that the banks get caught so upside down like they did in 2008 that they blow up. That showed that there's not total insanity in the central banking world to let that happen, because that's something that they can participate in a little bit more than the stock market. Sorry, just to throw that out there.
So favorite sector overall, Lance?
Favorite ice cream is pistachio. I'm sorry.
Watch the banks are going to be down 10% next week. And it's like, oh yeah, today.
What's your
was the
favorite
one-day
color,
event.
Lance? What's your favorite
Yeah.
color? Sorry.
I'm colorblind. I don't have.
Is there a particular trade that you guys like? I know you love that question for Q4.
I just put on Citigroup November 45 calls. I mean, I put them on this morning. I like them.
I like the small caps. I like the Russell. I would go with the broad market. I like the Russell 2000. I think that would be the best place for me to be right now for the next 3 to 4 months.
I gave you trades, but if you want a single stock that's got juiced, it's a tech-ish stock, a beta stock, Netflix. Look at that stock. That stock, even in the beatdowns, was bid. And then when we have up days, it goes super bid, which is nice to see. And they already have a lot of bad news priced in, down over 50%, et cetera. They've
got a lot of
let me show you.
bad news.
Can I share my screen for 1 second?
Please.
I did even more homework today.
Jeff, I like them fundamental. I always used to love them fundamentally because I like Netflix. Do you still like them fundamentally, or is this
Do you see this?
Call?
Are you guys seeing this? My screen or no?
No.
Hold on. 1 second. Here we go. All right. Fundamentally, Roger asked, and I shall deliver. I love them
fundamentals.
I love this fundamental at this point. It's a 20-something PE. I do know fundamentals on some level, but the big thing I want you guys to focus on is down here. You see the growth rate in Asia is over 50%. In Europe, it's 35%. This is a company that made $31.8 billion this year they're going to make, and they're still growing like gangbusters in all the right places. They still have double digits in the United States, kind of cheap, a lot of bad news priced in, still have a lot of growth. I don't know. I think it's worth a shot. Market's the market. It's cracked. The economy's in free fall. You know my opinion of the leadership, the dog shit. All those caveats aside, this is still a pretty decent company at this level with really good price action, in my opinion.
I'm going to show my chart now of Netflix. Look at this monster. This is a 5-minute chart of Netflix. 1, 2, 3, 4, 5, 6 buy signals today. And look at the volume on it. You go down to the daily. We actually just did a long trade for heavyweight trades in it. Look how many numerous longs, even on the daily.
It's one of my money flow elite trades, and it's
if
this month, which has been terrible. The stock, the calls up over 100%.
Yeah, if you told me the market would be down, what was it, 10% the S&P over the past 7 days or something?
Yep,
basically down every day.
8 something percent, Lance.
Yeah, if you told me that and Netflix would be flagging like it wants to break out again,
They just want
Um,
back-to-back day up days in the Nasdaq, and this stock is trading up north of 250.
and this is, this is not just like, oh, look at this little move. This is a near 7% move. I mean, that's a major squeeze. And if you told me that when Apple would be getting liquidated today off negative news, Apple down a little over 3%, I would say you're crazy. You're never going to see that, But and Disney that bad? Have you looked at Disney the past? Like they're down almost what 30%, just about since the earnings pop. But Netflix that strong? Oh,
It's crazy.
Well, yeah,
So
you're seeing stocks that have gotten smashed to pieces. The ones that have really gotten smashed to pieces that are done profit warning are catching a little bit of it. People are nervous about shoes dropping still. Like Apple had a shoe that just dropped. That's why, right? Like they said, there's tepid interest in iPhone 14. They're not going to grow the same way they thought they were. That was a shoe drop. So if you've had the shoe drop and you're showing relative strength and you're semi cheap, people are trying, they're nibbling on those names. That being said, the market's still the market, and we're still in like an rising tide, sinking ships, torpedoes type of action.
mhm.
Tesla is another name you could add to that Netflix category.
Right.
I know it's not ripping today. It's only up a couple bucks, but that name, if you told me the market would be this bad and Netflix would be Tesla would be holding up, one of the most shorted names out there, one of the most hated names out there, you would, in normal circumstances, you would say Netflix would be one of the first names. Tesla would be one of the first names to get massively sold off, and it's been holding up extremely well.
Yeah, there's a lot of signs. There's a lot of signs that a lot of the stocks that have been beaten down are starting to come up. And as I said, there's a lot of signs. Usually, when you start seeing biotech, small caps, speculative stocks like that, communication stocks, which lagged the first ones to go down, we're getting very, very close to the bottom. The only thing I haven't seen is that capitulation, which we may not have, but typically we do before we start moving higher.
Yeah, I've been looking at more in the crypto. We've been holding like that 18, 19, 20,000. I still don't feel like we've had it there.
Oh, crypto is going to get so. My view is that, and I like crypto long term, but I'm waiting for like the super death in crypto. Is that it's kind of like a fancy boat or something like super exotic that rich people play around with when they feel super rich, but the economy is really starting to roll over. And when people start going like second orders of what's important money, the first thing they're going to sell is like a Bored Ape, and then they're going to then they sell their Ethereum, and then and then that goes to the stock market, and the stock market losses get unbearable, and then the stock market money gets sold, and so on and so forth. So I think crypto still has another like 30 to 50% of downside risk in the next 12 to 18 months, in my opinion. I could easily see Ethereum trading at $700. I can easily see Bitcoin at 12,000, 11,000. It wouldn't be beyond the pale, in my opinion.
It would be very healthy if that does happen and the stock market holds and just says, hey, we're no longer that correlated. Because if you recall, especially in tech names, it was crypto that went first. Then you start having the ARK, then you start having your leaders.
But we haven't even experienced the true pain that J-Pow wants us to have, where like people feel poor. People don't really still feel that poor yet. That's the crazy part. Like the market makes them feel poor, but when the income gets hit too, the double whammy, which is coming, kids, like that's not avoidable at this point on what they've broken. Then you get another leg of insanity that's coming. My only real prayer in this whole thing is that we don't have a financial crisis on top, like a financial systematic crisis as well.
Mm-hmm.
Yeah, especially with housing the way it is and
Before
starting to unfold.
Yes, definitely. We're going to be talking a lot more about that in the coming weeks. I know Jeff has a lot of information on that. But before we go, I do want to talk about the strategies we're using. Like Roger, you have the code breaker strategy that you've been using lately that people are loving. And you're doing another event about that, right?
Yes, so far so
Today?
good. We're going to be doing an event today. I think we have like 80 spots or so. We started with 369 spots. We have like 80 spots or 70 spots left, and people just can't get enough of Codebreaker. They really love it. We're going to do another session at 1 p.m. today. We're
Okay.
definitely gearing up. You know, this is getting close to the end, and I think people should definitely watch it. I'll do an market update, but definitely maybe somebody can post the link. It's happening at 1 p.m. Eastern time today. You guys don't want to miss out. Codebreaker's very, very cool. I talk about, and by the way, I'm not talking about small caps because of Codebreaker. I'm showing you the evidence that there's clearly a rally right now in biotechs, and it's been going on for quite some time. There's been a lot of talks. Matter of fact, the last two I keep saying Bloombergs. The last two, I must be thinking about Jeff and his Bloomberg. The last, every time I look at Barron's, there's a huge expose on large cap pharma taking over, taking over and getting really hungry for these smaller stocks. And I think COVID kind of pushed that industry into the forefront a lot faster. Gene programming, all of these things. So the big companies
Yes.
are going to be in a buying spree for a while, and I think it would be foolish of us not to consider biotechs, because they were, and small caps were, the first sectors to go down. Usually the first to go down is the first to come back up. So very, very important.
And Lance, what about you for your short-term strategies? I think you have a couple of faves.
Well, you know, when you're a one-time trading champion and
Rub it
and
in.
just
Rub it in.
absolutely crushing everyday trading, bear market, bull market, you name it, market. I want to tell you a quick story, Laura. About a year ago,
Do
Friday,
tell.
September 24th. I haven't read this yet, by the way. My system picked up on $330,000 wire on Royal Caribbean. We actually saw some Carnival that day too, I remember. Meaning that someone big on Wall Street would send possibly Royal Caribbean shares higher on Monday morning. Maybe they want to escape the hurricane. World champion, thank you. So I sent out the trade. I was wearing my Costa Rica hat, oddly enough, to about 500 traders. And then on Sunday afternoon, they built some badass cruise ship. So Monday, the stock popped. Went from like $90 a share all the way up to about $94 a share. Nice move in Royal Caribbean. And those calls were up around 139%. Nice move. Maybe a nice cruise on a Royal ship. Traders had the chance to potentially double their money come Monday's open. But here's the thing. If we held the trade longer, we would have exposed ourselves to another market sell-off. And that has happened many times in many stocks, especially if you trade Tuesday, Wednesday, Thursday. You know, if I look at my track record, I probably lose during the week more than any other time. The trade would have been wrecked by the very volatile markets. And just like that, one of my favorite, to be honest, it's been my saving grace of 2022, is trading on Friday afternoons and looking to close the trades come Monday. So you're in the market Friday afternoon, you look to be out by Monday morning. Sometimes we hold them a day longer, but very, very short term. We limit our exposure to the overall market because confidential information is often leaked and shared by hedge funds, corporate insiders, bankers. I believe yesterday, the banks got fined again for using WhatsApp, unmonitored, billions of dollars. They can't go to they can't party over the weekend now. They're getting fined. They're getting caught on WhatsApp. I want to spot that news because rarely will a company start the week off with bad news. Like if you look at Apple, they got hacked last night and released their bad news, right? When did that happen? On a Tuesday night, right? Today, Wednesday, the stock reacting. The best news they prefer to release sometime over the weekend, meaning they get to start the week on a positive note. Everyone wants to bid up their stock. And that's why if you ever wake up Monday morning, you see all these stocks up. Like, what's the market? Pre-market movers? It happens usually on Monday. Now, some of those examples are from our weekend trades. We've had names like Corsair Gaming. Dawn says she loves Wiretap. I love you, Dawn. Corsair Gaming was a keyboard stock. They make my mouse. They make my keyboard. Actually, the video gamers or the PC gamers use them. It went public and the stock was down around 30% from 2021. We got 6 wires come in on Friday, and it meant, hey, possible news story over the weekend. It was $579,000 that they wired into that gaming keyboard stock. So I opened a trade, and over the weekend, it became a meme stock, apparently. There was all this good news, and 9:30 Monday morning, officially, I believe, 36 seconds into the open, that trade went up around 610%, potentially on the call options. So it was literally in the trade around 33 minutes and 36 seconds. It's amazing, right? For $1,000 into over $7,100 in a weekend. Now that has been a rare trade, a massive trade. Massive. Let's just be honest. Not all will be that big. We've had some big winners though in Royal Caribbean, the plug. I normally shoot, for full disclosure. Don says I often beat out Lance by selling most positions. Thank you. I get that a lot. I usually shoot for around 30%, and the average weighted return is 15.8%. We've had 111 winners, only 46 losers with over 70% win rate. And our total options rotation, the math nerds in the back said 528%. I'll take it. So the program is the Wiretap Trade Alerts. It scans 16 different option exchanges, and we look at trade size, expiration, volume, time and sales, the dollar amount, so premium. And when all the factors line up, we send out an alert, and it has been our saving grace of 2022, to be honest. We launched it in 2021, September, and it has crushed it. Phenomenal stats. Very proud. 111 winners, only 46 losers. Our average hold time is 3 days because the weekend. But we're in the trades literally Friday afternoon and usually out by Monday morning, sometimes Tuesday. But very good results. I'm very proud of it. Again, our average hold time is 3 days, and I just got filled in something. 15.8% average return based on weighted position size. So we keep track records of everything. And here's how it all works. Each Friday, when the system identifies a wire, we will send you out a trade alert by 3 p.m. Eastern time. We've been doing them earlier. Thank you, Ruth. Thank you, BB. We've been doing them earlier because I listened to the feedback and people want the trades earlier. I get it. You're busy. We send it text, email, and Telegram with instructions. Then Monday morning at 9 a.m. Eastern, we send you a pre-market game plan. And then we send you another text message and email at 10 a.m. with the trade alerts, the exit instructions. So you receive 3 trade alerts each Friday afternoon. And then we rank them by position size, just so you know proper risk management. We also have education, like an Option Pro crash course. You get a love it or leave it guarantee. If you don't like it within 30 days, just call and you get a full refund. It's been really good though, so I think you'll love it. We have been crushing gold, the S&P, obviously Bitcoin. I would hope so. And the service does retail for very expensive, around $2,997. But we do have a discount rate, meaning for a limited time, we're slicing the annual price and we put together a VIP offer. As long as we have this up today, you will get this VIP offer. So if you sign up now, you'll get 3 trade alerts each Friday. And it is only $9.97. So a deal for a full year of the Wiretap alert system. That's actually a really good deal. And if you're needing to upgrade or renew, please call the number 877-212-2646 because there's a VIP special deal for 1 to 2 year availables. And the chat has the link to sign up. So
I think
if you
with
remember,
the VIP, it's actually as long as you publish. They're doing a
Oh.
very special offer. So if people already have it, but they want to upgrade to VIP, this is the lowest price they ever offered. I just got a message from from the team telling me that.
Look at that. I love deals. I was at Costco the other day for the hurricane. And
There
now
you
you
go.
get 46% off VIP membership. If you already have it, first of all, thank you. I appreciate it. If you're coming up to renew, please call in 877-212-2646 to get your renew going on, especially with the discount. And if you're new, check it out. It's only $9.97. I think the price was, the link is in the chat. And it's a very cool service. And then usually too, a little cherry on top, I try to go live once a month to put on the trades with people. So we have like a big Zoom room where we actually put on the trades and hang out and do market analysis for about an hour, sometimes longer. But we do that about once a month. We try to schedule it just to touch base. If you have questions, we do screen sharing. And we do have, I want to say, like 12 plus hours of education, of coursework, of past training sessions. And then obviously the whole strategy, how to implement. We do use straight calls for bullish, puts for bearish. You can do the stock too, but we go over all that in the members area because, obviously education, confidence, being comfortable, knowing the system is very important. So you always want to, make sure you get that down before risking any money.
So in on Friday, out on Monday.
I love
Special
it.
offer, and
Love it.
especially for the VIP membership, the life of the service.
I like
Excellent.
the deal we put together. Great work,
Oh,
team.
I love it.
VIP.
Take advantage of it, folks. Do it now while we change our mind and raise the price, because the feedback is great, the service is great, it's a great program, and get in on it now. Lance is hot. Let's do this.
It
Yeah,
has
and
an
you can also
outstanding
call us.
track record.
And
Yeah,
don't
you
raise
can
the
also
price. Don't raise the price. I know people were saying. So to lock it in, call
do
us
it now, folks, before the storm forces us to change the price.
Well, thank
Seriously,
you all.
do it now. Thanks, Laura. Thanks, Lance. Thanks,
For
Jeff.
coming. Lance, batten down those hatches. Be safe. All of you be safe down there in Florida today.
Listen, I will say this one last thing, because I just got more messages about the hurricane. So far, fingers crossed, it's not bad. I think the perception is like I'm going to be flying off, what is it, Mary Poppins in an umbrella, and cows are going to be going through the twister. So far, it's not bad.
It's Dorothy and the Wizard of Oz, but I'm with
oh,
you.
Yeah, is it? Oh, that's. Well,
And folks, don't
I remember
forget-
one of those movies out there. But
Yeah,
I will do everything I can if I have to teleport, if I have to go find the public library computer to put the trades on for this Friday. So make sure you're set and ready to go this Friday.
Attaboy, Lance. That's what we like to hear.
Thanks,
Keep
guys.
it
And remember,
rocking.
I'm having a live class. It's happening in just a little over an
Right.
hour. Go in that room. I just posted a link below. Thanks, Jeff. Thanks, Lance. And thanks, Laura. Really appreciate you guys. Bye, everyone.
Thank you, guys. Best
Bye,
y'all.
guys.
God bless.
Thanks,
Bye.
everyone.
Bye bye.